not all of the others. And the SGX Nifty, the last time I checked when we were doing the trades at about 8:30, 8 o'clock was about 0.25% higher. So it's not dire cues as yet, but we know what's happening in the markets these days. Even if we move up, and the Bank Nifty showed that yesterday, moved up quite dramatically and then came off completely. Financials are looking just so wobbly. It's not a happy hunting ground. We'll get in Jeffrey Dennis first, though, in just moments from now, talk about the world picture very quickly before we move back to India, because the US markets are looking slightly okay. I think what is fueling the rally probably there, and let me ask this question to Jeffrey because he's anyways on air. Jeffrey Dennis, thank you so much for taking the time out and speaking to us. You know we love having you. Just a quick question. This optimism that we have in the US markets, is it because people are kind of putting two and two together, that states are opening up, the cases are high but are leveling off, and therefore things may not be all that bad, or is it something else?
Well, I think it's a version of that. I mean, my view for some time has been the reason we had such a sharp fall, obviously, until around late March, and then have had a rally since then, is that we had a huge amount of bad news in a short period of time. The economy stopping, corporate earnings stopping, of course, the virus hitting really badly. And I felt from then on there would probably only be relatively good news in the sense that states would start to open up. And we know the economic news is going to be bad. And if you look back, most days when you've had bad economic news, the markets have sort of ridden through it. So I think investors are starting to say, you know, what happens now if you are getting a reopening? Does that mean that, you know, the worst of this is over? Which means the risk to this, of course, is that the economic data is much worse than expected for longer. Or you get a really nasty return of the virus later this year or into early 2021. So yeah, you're right. I think the market is taking heart from the fact that you're seeing some opening up going on in terms of these states.
Now, Jeffrey, the last time that the big call that you had given before almost anybody else, that let's play this market by the recession playbook. Then the Indian markets were above 10,000. We cracked 25% from those levels. We bounced back now. Do you reckon that these are bursts in an otherwise bear market? And do you reckon that EMs at large in India too would actually be headed lower? Never mind these short bursts that have happened.
I think what's interesting is that, I mean, emerging markets have, of course, come off the bottom. They've not come off the bottom as much as developed markets have, and the U.S. has, and I think that's because the dollars remain strong, so a lot of these currencies have stayed under pressure. But somewhat unusually, India has done fairly poorly. Now, you need me to tell you, and your listeners know well, that there's a number of local factors that have come in which have made it very difficult for Indian equities, whether you're talking about the banking system or the rise in the coronavirus cases, etc. You've got a very large budget deficit coming. There's not a lot more room to reduce interest rates. Growth is falling very sharply. So I think if you follow the playbook through, I think assuming, again, as with all countries, that you're not going to get a second wave of this virus, I think probably erratically we're working our way higher from here. What I think is less clear is whether India will be an outperformer within emerging markets, because clearly you have a number of very large emerging markets, China, Korea, Taiwan in particular, and also Central Europe, which is much smaller, which have done a very good job controlling the virus, whereas I think it's fair to say India is still in the early stages on that. So I think it's part of the global rally. India may be following the global rally, but frankly, I think the chance of our performance at the moment is quite low.
Just one final question, Jeffrey. Would you reckon that the chances of underperformance are high? I think Oaktree and Howard Marks did this. He was moderating a call with 3 of his EM experts, and they said that the headline in India is not COVID-19. This was a month ago, but he said the headline in India is not COVID-19, but the shadow banking crisis, and financials in India are looking particularly weak. Do you reckon that's the Achilles heel?
No, I think that's absolutely right. I mean, I think logically, when you have a 35% drop in the U.S. market in 5 weeks and emerging markets fall almost as much, if not a little bit more, you would expect India to be an outperformer, not least, of course, when the initial decline occurred. This is because of China, with which India has very relatively little trading linkages. So clearly, the really poor performance of India this year, which has been a big underperformer within emerging markets, must have to do with other factors. And I think the domestic factors are kicking in. So I'm not saying by any means the virus is over in India. Far from it. I think I don't think it's over anywhere, frankly, but it's going to still be around for quite a while. But yeah, your longer-term problem that needs to be fixed, which is going to constrain the economy and constrain the RBI, is of course the shadow banking crisis and the general poor performance of the banks, the problems of Yes Bank in particular, and that's, I think, the fundamental problem, which is undoubtedly at the margin contributing to what is a very, very soft economy right now.
Jeffrey, it's always good having you. Thank you so much for taking the time out and speaking to us today.
Thanks very much. Have a good day. Bye.
You too. You too. Have a good evening. Well, that's Jeffrey Dennis with his thoughts, expert EM commentator. And we called it right the first time. Let's wait and watch the shadow banking come and bite us. That's not all, frankly. We'll talk to Rasmi Koza about some of the other things as well. But speaking of all the key newsmakers today, I think let's start off with the two biggest ones. And we'll get to Rasmi Koza's views on those. But first, I get my colleagues in. Sumit Sarkar, firstly, to kickstart these proceedings with the news of last night, which is the hike in taxes or duties, whatever we call it, for petrol and diesel. Sumit, good morning. Tell us the news in a nutshell and then tell us the impact.
Good morning, Neeraj. So Indian government starting today has increased the taxes on petrol and diesel by 10 rupees and 13 rupees per litre respectively in order to shore up the revenue impacted due to slowing economy and a nationwide lockdown. Now, this is a second such hike done by the government in less than 2 months and the steepest one to reaping the benefits of the lower crude prices. However, despite this steepest hike in taxes, prices of retail fuels remain unchanged for the consumers. Now, this means that the fuel retailers will be bearing the brunt of excise duty hike. Now, thus, the oil marketing companies, which were recently earning a gross marketing margin of nearly 18 to 20 rupees per litre, will now stand reduced to 3 to 6 rupees per litre. These higher marketing margins in the current scenario were expected to help the oil marketing companies tide over the losses due to lower fuel demand, weakness in refining margins, and a one-time inventory loss. That's expected to, and this lower gross marketing margin is expected to impact HPCL and BPCL more, as retail sale of fuel contributes nearly 60% and 40% to their EBITDA. Now, the current gross marketing margin also factors in the recent surge in crude prices. Brent crude, which is the Asian benchmark, has now been gaining for the last 6 days its longest winning streak in over 2 months, and it has gained nearly 55% in the last 6 days on optimism that the output cuts are easing the supply glut in the market. And because of this and the hike in excise duty, the current marketing margin comes down to 3 to 6 rupees per litre from 18 to 20 rupees per litre what they were earning earlier.
Okay, Sumit, just one quick perspective. A lot of people say that the valuation comfort is there for some of these OMCs. Compared to historical valuations, are they trading at near all-time lows?
Well, they are trading at a lower valuation near their all-time lows, but then these valuation at this point of time, it doesn't come into matter, because if you see, there's hardly any fuel demand, there's weakness in the refining margins, there are inventory losses that the oil marketing companies are expected to report in the fourth quarter, and now given the fact that the gross marketing margin will also be lower, so it means a total impact on all earnings for an oil marketing company. So valuation at this point of time does not matter for these companies.
Okay, we'll leave it at that. Thanks so much for giving us that update, Sumit. So do watch out for the oil marketing companies in the session today, and we'll ask Rasmi Koza about what his thoughts are on this move in moments from now. Well, the other big thing that you have to focus on is what could be happening to the banks and the MFIs in the session over the course of the next few days. I think there's a lot of talk about the moratorium and what some of the banks might do with it. Could there be extensions, etc., etc. Now, so much happening in banking. Let me get in my colleague Vishwanath Nair, of course, who joins in with a piece of news that he's learning about and the potential impact of that. Vishi, good morning. Tell us about it.
Good morning, Neeraj. So yes, there is some talk between the banking community to discuss the impact of the moratorium on other lenders. Now, if you remember, when on March 27th, the RBI announced a 3-month moratorium on repayments of term loans, the banking community had decided not to offer this to the NBFCs. Now, their argument originally was that on the 27th of March, when the RBI announced the moratorium, by that time the NBFCs had already completed the collections on their loans. So there is no reason why they would need a moratorium on repayments because they already had the cash available with them. Plus, of course, back in November, the RBI put out norms stating that the NBFC industry must maintain a liquidity coverage ratio on the amount of liquidity that they need. So they need to have instruments which are high quality liquid assets on their books. So the banks decided that because of these things, there would be enough cash on the NBFC balance sheet, which could help them repay the lenders and thereby, continue their business while still offering the moratorium to their own borrowers. Now, of course, that argument did not stand, and the NBFC industry went through considerable amount of pain. There have been a lot of representation from that industry, not just the RBI but also the Indian Banks Association. Now there is a bit of a rethink on whether that moratorium should be offered or not, because of course banks were a little confused whether they should be offering it or not. Last week during a meeting with the RBI governor, it was clarified to the banking community that the RBI would not object to NBFCs receiving this kind of a moratorium. So now banks are sort of figuring out individually amongst their own independent boards, and they will come out with a decision in the next few days. But what is key to remember is that we are already in May. Now, the moratorium that the RBI had announced would last only till the 31st of May, after which any repayments will not be covered under the moratorium. So we have only a few more days left for that. But it is important to still notice that if banks were to give this moratorium to the NBFCs, then any repayments that were delayed from March 1st to the 31st of May, that would get covered, and thereby the NBFCs will not lose out on the asset classification, because that is an important thing. If you miss that 90-day repayment deadline, then you're classified as an NPA unless the moratorium is invoked, and thereby you can protect yourself from that downgrade of asset classification. So that is where things stand now. The boards will be deciding on their own whether they want to offer this moratorium to their own NBFC borrowers. And if that decision does come in, then at least for the payments between the 1st of March and 31st of May, the NBFCs are going to be protected.
Okay, Vishy, very quickly, for the benefit of our viewers who might not quite understand this, what would it mean for banks? It's good for the NBFCs. What would it mean for the banks?
Well, banks have about 8 lakh crore worth of loans to NBFCs. Now, let's assume that even if a chunk of it, even half of it is not paid for the 3 months, well, for banks, at least you have to set aside an additional 10% provision that the RBI requires you to do. So 4 lakh crore worth of loans, then 40,000 crore worth of provisions that the banks will have to make if they allow the provisioning to the NBFCs. If they do not allow the moratorium, then within the next 1 year, the banks will have to make about 15% of the provisions. So it's more of a, from the frying pan into the fire sort of a situation for the banks, because if you offer the moratorium, you need to make a provision right away. If you do not offer the moratorium, then over the next few months, you will have to still make a higher provisioning. So they need to take a call on what actually works for them, whether they can continue offering the provisioning or not. But remember that if they do offer the provisioning, they can still continue booking that interest income for the next few quarters, and they can collect it from the NBFCs eventually when businesses start to open up and then the NBFC industry comes back into shape. They can recover that amount. So it won't be a direct hit on the income part of their balance sheet. But of course, there is a provisioning involved, and that will hurt the bank's profitability.
Okay. Well, Vishy, thanks so much for putting that into perspective. So we'll watch out for banks. It could be interesting move as well. Let's see. From bank's perspective, more not as, yes, it does impact them, but from an NBFC perspective, maybe a lot more critical too. But the decisions could be crucial. Maybe they could come in as early as today. So you have to watch out for that as well. Let's wait and watch. Okay, let's focus a bit on trade. It's 8:45 and get in our experts to try and talk about how should you approach trade in a scenario like this when the SGX Nifty is likely to start off marginally higher in trade. Chandan Taparia joins in right now with his thoughts. Chandan, so good having you. Thanks for joining in. What's your approach today, Chandan? We have had 2 days of a crack. We might have a marginal uptick today. What do you do with the Nifty or the Nifty Bank today?
Yeah, very good morning. We have seen selling pressure in the market from higher levels in last two trading sessions. At the time of expiry, Nifty made high near to 9889 and we have corrected towards 9200 zone on last trading session. So we believe that bounce could be sold. We are witnessing the decline in the put call ratio with jump in the volatility. So as of now, till it remains below 9450, we are expecting index to go down towards 9088, kind of levels.
Okay. And would the Bank Nifty be the principal culprit, Chandan? Would you initiate some trades on the Nifty Bank today?
Yeah, exactly. In fact, the Bank Nifty is more weak. Till it remains below 20,000 zone, we are expecting it to go down to us 18,700, 18,500 kind of level. We have seen built up of short position in the Bank Nifty and many banking counter are making lower top, lower bottom. Most of the PSU banks looks weak, including SBI, Canara Bank, BOB, PNB. In fact, the counter like Axis Bank also showing the sign of weakness. So till Bank Nifty remains below 20,000 zone, we are expecting it to go down to us 18,700, 18,500 levels.
So you would initiate a short on both the Nifty and the Nifty Bank. Am I getting you correct, Chandan, on open today?
Yeah, we will use any bounce back as a shorting opportunity with given mentioned levels, or one can also go with buying put or bear put spread to initiate such kind of strategy.
Okay, so some bounces on open might be used to initiate some fresh shorts by Chandan Thapuri on both the Nifty and the Nifty Bank. We'll just get to his stock specific trades in a bit. Just a follow up before we get in Gaurav Bisa, and then I get in my colleague for the stocks and news as stocks in focus too. But Chandan, just come in on the NBFCs as well, which look very, very weak yesterday. Bajaj Finance in particular. Do you think the trend is lower? Can these stocks go down substantially? Would you initiate a fresh short here, say for example on a Bajaj Finance?
Yeah, exactly. Most of these stocks are making lower top, lower bottom, and we have witnessed that bounce is clearly being sold, and bounce is holding hardly holding the gains, and it seems that bounce is short-lived and major trend is negative. Technically, we are witnessing the breakout from his inverted pole and flag. Earlier, it took support near to 2019-15 zone and turned higher to 2400 levels, and but now the way it is again falling and breaking the level, most of these stocks have potential to go down. So as of now on the Bajaj Finance, till it remains below 2200 zone, we are expecting it to go down to us 1750 to 1800 levels on the lower side.
Okay, watch out for that as well. Okay, so that's the trading view. We'll get in some stock specific news in moments from now. Gaurav Bisa will also join in. So good to get you all the trades together in one go. Before that, what are the stocks that you should focus on aside of the oil marketing companies and aside of the banks? Nikki Mirchandani joins in with a list of the 3 or 4 names that you should keenly watch out for today. Nikki, good morning.
Good morning, Neeraj. I'm going to start off with Adani Ports and SEZ because the numbers have been quite weak in this quarter. There's been a fall in SEZ income. There's lower revenue, forex losses, higher operating expenses. All of that has weighed on the operational performance of the company. Having said that, the company said going forward it intends to reduce the operating costs and capex. That will be curtailed to 1,800 to 2,000 crore versus 3,615 crore that they've spent. Additionally, important point that the company highlighted that it's going to be, the group has highlighted its resolve towards further unwind borrowing against pledge. This is a method that they've been using in the past for financing in future. And if you look at the last 2 to 3 instances, the promoters have released substantial stake, to release their pledge on these stakes. So on account of that, you might just see some traction coming in on the Adani Group stocks, or they've probably been factored in. NIIT Technologies, that's one company which came out with numbers pretty much in line with estimates numbers. Broadly at operational level, the growth was supported by strong performance in insurance as well as the recently acquired Wishworks business. The management further has highlighted it expects a single-digit decline in Jan 20 quarter before recovery could come in September 20 quarter. It also expects the limit of YOY damage in EBITDA margins to be less than 80 BPS in FY21, supported by the tight control measures. And last in the list, we're looking at Majesco, where Amanta Holding has acquired in more than 2.8% stake in this counter. On the selling side, you have DSP Mutual Fund, which is sold in roughly around 2.9% stake in this counter.
Thanks for that, Nikki. So those are a few stocks that you have to monitor in the session today. Rasmik Ozar-Johnson with his thoughts. Rasmik, good having you. Thanks so much for joining in. We're 10 minutes away from market open, so I'll cut straight to the chase. The most important newsmakers of the day, 3 or 4. The oil marketing companies, do you think the impact will be for a day, or could this have a long-lasting impact, the decision to hike duties and not pass it on to consumers?
Yeah, hi Neeraj, good morning. I think oil marketing companies probably will have some knee-jerk reaction because of the recent jump in crude prices. But nonetheless, I think the marketing margins, as and when the activity resumes, will obviously go up because most of the companies have actually secured crude at lower levels recently. So going forward, I think so numbers could be good, but we should keep in mind that similar to what we saw in case of Reliance, there could be a lot of inventory losses in Q4 results as well as in Q1 results also. I think we'll have to share with some massive inventory losses. Beyond that, if someone is looking at, then I think so the gain in marketing margins in FY21 will far outweigh the potential loss in the refining side of the company. So I think we have been very positive since this crude price fell from the peak, and we remain positive on most of the oil marketing companies, especially BPCL, IOC, and any declines I think should be used as a good buying opportunity for getting into most of the oil marketing companies.
But you don't think this tampering of duties brings back the ugly ghost of there being government intervention once again?
I think this was given, I think, because what happens is when crude prices actually go down substantially, the entire economy benefits, and to a certain extent, some benefits are go to the government, some benefits go to the consumer by way of lower prices, and some benefits go to the oil marketing companies. Now, the sheer fall of crude price has been so huge that I think so even if the government raises taxes, there's enough left for the oil marketing companies to gain by way of better margins on the marketing front. So maybe yes, temporarily, there could be some knee-jerk reaction on this, but I think going forward, once activity normalizes, I think so maybe we should see these companies again gaining. So right now, what is happening? We are into a lockdown scenario. So even actually, if the duties go up also, the gains are not going to be big for the government also. So we'll have to just wait for normalcy to come back. And then by then, I think so, a lot of more developments will also happen. So we just have to wait and watch. But yes, I think it has, because the gains have been huge. So I think there is enough for everyone to take away from it.
Okay. What did you make of the results of Adani Ports and SEZ, Rasmik? Any thoughts?
Adani Ports, no, I haven't gone to the results completely, but I think Adani Ports has been one company which has been doing far better than the other ports in terms of essential inputs, normally in terms of coal and other key imports which in the country does. But I think overall business is getting impacted for most of the port companies. So that's quite negative for most of the companies. We haven't actually come out with our update on the company. So I'll just wait for some time before making any comments over there. So one good thing in Adani Ports is that I think from the promoter side they have been removing a lot of pledges, which is a good positive for the company. So overall structurally business is getting impacted and will get impacted I think going forward also, because the exports and imports activity has been slowed down dramatically. So in that context, I think so going forward there will be impact and we'll see a cut in earnings going forward. We haven't actually come out with our update on that, so I'll just refrain from answering that.
Okay. Rasmik, stay on. We'll have to talk a lot more to you. There is aviation, which is in focus. Upstream oil could be in focus because of the pickup in oil. And we'll do all of that in minutes from now. But we are 5 minutes away from market open. Get in Gaurav Vissa as well into this conversation. Gaurav, good morning. Thanks for joining in. Chandan spoke earlier and said that he's bearish on the Nifty and the Nifty Bank. Would you be opening up shorts on open as well?
Good morning. I would not open shorts. I would rather wait for proper levels to come. One of the reasons why people are a little bit bearish, there's a rising trend line breakdown that we have seen in Nifty as well as the Bank Nifty, and that has increased the pressure on both indices. So, in my opinion, any jump towards a level of 9250, 9270 can be a good shorting opportunity. Keep a 70-80 point stop loss on downside. 9000 is what I would be looking at for Nifty. If we sustain our levels of 9180 in the opening hours, then a spike can be expected, and on that spike I would rather sell the Nifty index. So for me, it's a sell on rise, not at the current price.
Okay, sir. And by the way, Chandan also said that he would not immediately initiate on open, but maybe at a slightly higher price. Okay, let's try and nail it down to specific stocks for trade. Gaurav, I'll come first to you. There are two recommendations, or one top recommendation, whichever you want for the day today.
For me, then it would be Hero Motor, because it has seen a breakdown. There's a strong hurdle at levels of 2020 in the futures. Use that as a stop loss on the downside. We can expect 1900, 1910 coming in matter of a day or two.
Okay, so Hero MotoCorp is the top idea on the short side from Gaurav Bissat. Chandan Taparia, what about you? What are your top calls for the day today?
Yeah, if you want two, then I'll go with buy Bharti and sell SBI. If you want one, then I'll go with sell SBI. So first I'll talk about the State Bank of India. We have seen the negative breakdown in most of the PSU banks, and SBI has been finding multiple hurdle near to 195, 198 zone from last 5-6 weeks. Yesterday also it has given a breakdown with built up of short position with significant call writing beyond 200 strike. And the way stock has broken the immediate support, it is opening the downside to us 160, 155 level. So recommending to sell on SBI with a stop loss of 177 for the downside target to us 160. And second trade is buy on Bharti Airtel, where we are witnessing positive price pattern with built up of long positions. Stock witnessed some cool down from higher levels, but overall setup is positive. So recommending to buy with a stop loss of 515 and expecting it to move to us 555 kind of levels.
Actually, Gaurav, can you come in on the other names, which is in the oil and gas space, which is Reliance and maybe an ONGC? How do they look on the charts or the derivative positions built up?
See, if you look at Reliance, then there's a good congestion at levels of 1500 on the call side, and we have seen that on multiple hurdles at those levels. There were a couple of instances where we've seen reversal happening from that area. So even with the positivity going around, when Reliance was the outperformer, it still could not cross above levels of 1500. On the RSI as well, we have seen that 1500 is acting as an Achilles heel. So in my opinion, as long as it's trading below 1500, I would not be too bearish on the name. Too bullish on the name, sorry. And for shorting, around the current junction, maybe let it break the levels of 1420, then we can have a confirmation that the trend has been broken. But so far, I would not short at the current juncture. But as long as it's below 1500, I would not be too keen. As far as ONGC is concerned, it's been doing nothing. There's a small rounding top formation sort of happening. So maybe at levels of 80, one can sell 80.5 in futures. Keep a stop loss of 82 on the downside. One can expect levels of 75, 76 coming, but not a very large trade, but a very small short trade can be created on ONGC.
Well, interesting. Actually, ONGC might so technically might be looking weak. Keep in mind, I keep on cautioning our viewers when there's a fundamental change which is slightly different. ONGC, because of the oil price hike, might just have some positivity to it. Keep that in mind. Rasmik, I can't have a very long answer because we are very close to market open, but just wondering, would you be optimistic on upstream like ONGC because of the oil price bounce?
Just from a tactical perspective, not from a long-term fundamental perspective, I think we will still stick with the oil marketing companies only at decline. But yes, I think there is a beaten down nature, a good dividend deal. So from tactical perspective, I think one can look at from a trading angle. Maybe from a delivery and or a long-term perspective, I think one should still avoid, because we don't know how crude is going to behave in future. It's too volatile and too difficult to take a hazardous guess on how the impact on profitability and business of ONGC is going to be. So yes, from a tactical perspective, you can do it.
Sums it up. And thanks, Rasmik, for that concise answer, because we are just 30 seconds away from market open. So just focus on that for a bit and then come back and resume our conversation with our experts. Keep in mind, Asia is a mixed bag. The SGX Nifty points towards a start which is marginally in the green, flattish almost for the SGX Nifty as well. So the Nifty might start off on a flat note. The question is, what could happen to some of the usual suspects? We'll talk about all of those names. I mean, the consumption names, aviation names, all of those could be very, very interesting to monitor in the session today. But the first rates on your screen in just moments from the pre-open session, it won't be as how do I say it, as exciting as maybe day before yesterday. but the start could well be interesting. I think the Nifty gives a more believable start than the Sensex. The Sensex is 1.25% higher, which I don't think is going to happen. Let's look at individual names and try and see what should one monitor. Adani Ports has this 10% downtick. I don't think it will have a 10% downtick despite that 1,000 crore forex loss. I don't think such a large open could happen, but let's wait and watch. I think BP, IOC are showing rates which again might not be really that large, but yes, we could have a start which is in the red for sure for these names. Watch out for Axis Bank. I think the Economic Times is reporting that the stake sale from the government on Axis and ITC could well be happening, and therefore it could be weak for a sector, for a bank in a sector which is anyways looking weak. And Axis is right caught in the flux of things. Retail focus, SME focused bank Nifty looking weak, and on top of that maybe a potential stake sale from the government. So all of that could augur poorly for this one. But OMCs it is, which are starting off on a very tepid note. What is doing well? ONGC, well, starts off, it looks like starting off higher. Let's wait and watch. There's some gains being seen in Reliance Industries as well. Let's wait and watch. 1484 could be interesting today. And HDFC Bank looks like starting off okay, but that's a few and far in between. I think these rates will change as well, so let's wait and watch what happens there. At the broader end of the spectrum, I think stocks like NIT Technologies and Majesco would be in focus. Persistent Systems would be in focus. We'll get to them in just moments from now. But let's talk about these usual suspects and try and figure out what they could be doing over the course of the trading session today. So firstly, by the way, the other thing is, I think there was a report about in one of the media houses about some fertilizer subsidy of 22,000 odd crores being released, and that's probably getting some excitement in all of these fertilizer names. So Deepak Fertilizers, Chambal Fertilizers, all of them. RCF is up about 4.5% too, so good going. NIT Tech, viewers, watch out for this one, 4.5% higher on arguably decent numbers. Rasmik, any thoughts on the mid-cap IT? NIT Tech, Persistent came out with numbers. Do you guys have coverage there? What did you make of the results?
Yeah, we have coverage in NIT Tech. That company has done exceptionally well in the last couple of last 2-3 years. But the stock actually had a huge run up in between. So valuation wise, the stock almost trades at par with or slightly on the higher side as compared to the other mid-cap IT companies. We are expecting around earnings to grow, revenues to grow at around 6%, and earnings also could be in somewhere in single-digit mid-teens. So from a valuation perspective, we had a buy recommendation for almost 2 years now. I think we have turned a little slightly cautious on the valuation side, given the headwinds on revenue and earnings going forward. Similar to what we have, same view on the large cap IT companies. So we have a reduced rating on the stock right now, and I think we will be little on the back foot as far as IT companies are concerned, be it large caps or mid caps, because for the universe also, we're expecting earnings to degrow by at least around 7-8% in FY21. The only benefit they have is currency. Otherwise, business is going to get impacted, and there is no clear visibility from any of the managements into, I think so. So on NIT Tech, just to summarize, we are a little cautious, and we have a reduced rating on that stock. So we will like to wait for corrections to get into the stock.
Okay, wait for corrections to get into the stock, but the numbers didn't look all that bad. By the way, I must mention some other stocks as well. So specialty chemicals continues to remain in focus, likely Deepak Nitrite, Alkalamines, Vinati Organics, Aarti might all start off well. So that bucket is looking very strong. Gaurav Bisa, on the charts, any of these specialty chemical names that look good for a trade even now after the run-up?
Not the names that you have mentioned, because some of these names might see some upside, but when we talk about environment where there's incremental volatility, I think going with these names might be a little bit risky. I'm not seeing a very firm trend as yet, but SRF is one that is still looking a little bit interesting. So as long as it's trading above the levels of 35.50, there is a possibility it can go towards the level of 3800, 38.50. Apart from that, I would not be too keen in taking a bet on these names.
Okay. Now, Rasmik and Chandan, I want to discuss Asian Paints. Rasmik, the management has said that virtually Q1 is a bit of a washout. I was looking at the estimates, and with an assumption that it reports about 2,800 crores, which is actually a bit of a stretch for FY20, and FY21 earnings could actually be lower. I don't know if you're penciling in lower earnings, but let's work with an assumption that if one quarter is gone away, then the numbers will likely be lower. The stock trades over 60 times. Why is this not an expensive name? Would you still keep it in your portfolio, or would you believe that a switch might be better?
Neeraj, Asian Paints, we're not very optimistic on the stock purely from a valuation perspective. Otherwise, business, I think so, is okay as of now, because what happens is that in case of paint companies, especially though the revenue gets impacted because of the lockdown, and demand will take quite some time to recover. At the same time, as when activity resumes, they'll also get the benefit of lower raw material cost. So to that extent, it's somewhere some of the negatives get neutralized over there. But earnings growth, I think so, we are still factoring in some earnings growth, because in case of paints, what will happen is this lockdown will impact the unorganized segment in a bigger way than the larger players. Though the larger players also have been facing or will face some kind of working capital issues, because a lot of inventories is already there, and if they resume production again the inventory levels will further go up. But I think overall earnings growth will still be visible in case of paint companies because of the raw material benefit. But as you said, the stock is trading at almost 51 times on FY21 estimates, which is way higher. And because of that, I think so we have a reduced rating on the stock. We have a target of around 18.25 as of now on the company. So there is no upside from the current levels to a large extent. So we'll stay away from the paint companies for some time till they become more attractive on the valuation side.
Chandan, what do the derivative in the chart positions say for Asian Paints?
Yeah, we have seen selling pressure in last 4 trading sessions with built up of short position. Yesterday, stock fell down with significant jump in the volumes. So as of now, it seems that stock may see some consolidation. It has taken hurdle at the upper band of the trading, comes near to 1900 zone. So I think it can go towards a 1500, 1450 kind of zone where one can accumulate. So this is a good stock comparatively, but immediate setup suggests negativity. So waiting for a decline towards 1500 to 1450 to accumulate the long position. And those who are looking for 4-5% decline, they can also participate for shorting opportunity in the counter.
Okay, the other one, and both technically and fundamentally again, is the aviation pack that I just want to very quickly tackle. Rasmik, do you guys have coverage here? And are you guys bearish?
Yeah, on aviation, we cover Interglobe Aviation, that's Indigo. We have a sell recommendation on the stock with a target of 900, I think so. In fact, I think we could see a further scaling down of the target price going forward because activity is not resuming, and this business is going to get more impacted, because even after lockdowns go away, people will be very reluctant in traveling, and there will be a lot of cautiousness in the air. So this business is going to get impacted meaningfully. In most of the cases, the fixed cost is pretty high, including the expenses on lease, rentals, and interest costs. So debt levels will go up for the sector per se. In case of Interglobe, at least they have some cushion of cash, while other companies don't have that cushion to a large extent. So given this environment where fixed costs will eat away and the debt is going to go or balloon quickly, it's going to be a very catch-22 situation for the industry. Unless you have some relief measure or some stimulus package or some incentive from the government side, without a government support, it is difficult actually to have a very positive view on the sector. So we are still negative on the aviation business because even though aviation fuel prices are going down, recently there was a 26% cut in aviation fuel prices, but unless business doesn't resume, it doesn't matter actually, even if the raw material price is going down for these companies. So net, we are negative on the sector and will remain negative for some more time. That's it.
Okay, Gaurav, technically, how does Interglobe Aviation or SpiceJet look?
Among the two, Indigo is one that is trading in the support area. It had formed a bullish harmonic at lower levels as well. So as long as it's trading above the levels of 900, there can be a technical bounce back that one can see and can jump towards the level of 1050, 1060. But a break below 900 would confirm that the trend is still weak and it can go to much lower levels. But for now, I think 900 is a very strong support on an immediate basis. And as long as it's above 900, I would be hoping for a 1050 move.
Okay, so you might actually be contra on this one. Okay, interesting. But the pre-open rates have settled, and as they have settled, we are about 0.25% in the green for the Sensex and the Nifty. The banks are not quite in the red. But lo and behold, you never know what could happen immediately on open. So that's something that you got to brace yourself for. But here, let's since we are minutes away from market open, let's tell our viewers all that they need to know to stay ahead in trade today. First up, Adani Ports and SEZ saw its revenue decline 5.2% on a YOY basis, while margins contracted from 62.7% to 56.3% in quarter four. NIT Technologies manages a 3.3% revenue rise on a sequential basis. Margins remain stable at 17.9%. The company also changes its name to Coforge Limited. Watch out for Adani Enterprises, Yes Bank and Kansai Nerolac earnings today. VST Tillers sold 761 power tillers in April, while tractor sales dropped 24% YOY. And Amansa Holdings acquires 2.8% stake in Majesco at 245 rupees per share. DSP Mutual Fund is seller with a 2.9%. 94% sell by that fund. Okay, now the pre-open rates on the usual suspects. Just want to get a quick thing going. I'm guessing IOC is not reacting as much. BPCL is the one that is cracked the most, 7.5%. Chandan, these OMCs, BPHPRC, a repeat question now that we know the rates. What do you do here?
Yeah, I think, volatile swings could be there. In fact, we have noticed in last trading session that the volatility is hinged in the counter, and the way some rumors and some news regarding the hike in the prices also giving some sort of volatility in the counter. So as of now, I think most of these stocks are near to their immediate support, so some sort of recovery could be there. However, one need to be noticed that the risk-reward ratio may not favor for any kind of setup as of now. But as of now, the price setup suggests 3 to 5% recovery could be seen.
Okay. The other one that is, by the way, mind you, Britannia is at 2950 now, so it's come off quite a bit. ITC is about 1.44% lower, so do watch out for that. But we don't have too much of red. Interestingly, we don't have too many large banking stocks in the red. Axis, in fact, is in the green. That's pretty interesting. ONGC starts off as the top gainer, 3.7% higher. The interesting thing would be, can these stocks do more? Gaurav Bisa is, of course, negative on ONGC. Maybe I ask Chandan. Chandan, if it starts off about 3.5% higher, could there be a tactical long trade in ONGC?
Yeah, in fact, you asked me about the oil marketing company, but I'm more positive on the ONGC because, in fact, the technical setup is quite positive. These stocks like ONGC is surpassing 50-day exponential moving average after a long time. And on weekly structure also, it has bottomed out with some long built up in last few trading session, started to form high rise, high low. So I think even if it opens higher, one can initiate for the long position towards 85, 88 kind of levels.
Okay, so watch out for ONGC. It's starting off as the top gainer, as I said, or could start off as the top gainer in the session today. Rasmi Goza, before we thank you, if you had to, is there a very strong conviction idea in the financial space that you have, or would you just avoid financials for the time being?
No, Neeraj, we'll avoid the financial space for some more time because what is happening, this lockdown getting extended and there's a little uncertainty coming out in terms of the kind of NPAs that could throw out in the system. And anyways, the RBI moratorium is also getting over by May or early June. We might see some extension possibly on that front, but nonetheless, we're not very sure about the kind of fresh NPAs that could erupt from the unsecured loans, that is SMEs, personal loans, credit cards, and some of the other unsecured loans which have been given. So there is a little bit of uncertainty, but on the same time, I think valuations have corrected a lot in case of banks. So we would be buyers or recommend clients to buy actually and at decent correction if you see, because the sector has a very high beta and they fluctuate and they're very volatile. So maybe if the stocks actually correct 10% from here, I think then it could make sense. The risk reward ratio turns quite attractive for them. And anyways, most of the big banks have already come out with results. So whatever negatives had to be factored in terms of numbers has already got factored in. And like names like Axis Bank, they're trading at 1.5 times. ICICI Bank on standalone business trades at 1.2 times. So there is enough derating is already taking place. It's only the uncertainty part on terms of NPAs and how banks will able to come out from this going forward. That's the question mark which is there.
Okay.
So
okay, Rasmi. afraid we'll have to leave it at that because the markets are about to start. But thanks so much for joining in today. Ajay Srivastava would be joining us in moments from now. I request Chandan and Gaurav to just stay on for a minute. We'll just take in the top calls post-market open, unfortunately, because we don't have any time to take them right now. Because here come the first rates on the Indian markets this Wednesday morning. About 1/3% for the Sensex is what the pre-open rates were suggesting. Let's see if they hold on, and let's see if the Nifty Bank plays the spoil sport yet again. We'll watch out for these banking names. Watch out for the oil marketing companies as well. Well, the start is flattish, but quickly giving way. The Nifty Bank in the red, as I said. Not a deep gash. All the three indices in the red. Shouldn't surprise. Let's wait and watch if this worsens. What is the top movers? So first, BPCL, Indian Oil, ITC, Axis, as per script. By the way, Bajaj Finance is down about 2.5% as well. So that is looking wobbly. Asian Paints starts off weak. So that is looking weak. Kotak Bank starts off weak. That is looking weak. Not surprising at all. ONGC just about 2.8% higher. Keep that at the back of your mind. That is likely doing well. Bharti Airtel marginally in the green. There is strength in relative strength, let me put it that way, in Cipla, UPL and Shree Cement. So those are a few names that you got to watch out for. But the start belongs to the losers, particularly on the banking side, because the Nifty Bank is down and out, 0.65%. Axis Bank, 3.43% lower. Bajaj Finance, 1966 and counting. Kotak Bank, 1.5. SBI, 1.5. It's banks which are facing the bitter end of the stick. What about the broader end of the spectrum? Quickly mark a few names, what is moving and what is not, and then get in quick opening thoughts from our experts before we thank them. So HPCL, 8% lower. There is Rallis India, 6.5% lower. Indiabulls Real Estate, 5% lower. Den Networks, 5% lower. Those are a few names that stand out on the 500. Fertilizer stocks doing well. Deepak Fertilizers, 9.5%. JB Chemicals, 4.5% on the ET report. I think NIT Tech on the results up 4.5%. GNFC, Chambal Fertilizers, RCF. Again, some of the fertilizer names doing okay. So fertilizers it is, which seems to be doing reasonably okay for itself. Quick opening thoughts from our experts before we let them go. Chandan Taparia, Nifty Bank about 1% lower. Any trade there or any stock that you would trade on open? Okay, Gaurav, can I come to you? Quick opening thoughts, any opening trade?
Well, if you look at the Nifty, then I would wait because it's moved already. The risk reward again for shorting is not favorable. It still remains a sell on rise market for time being, and it can test levels of 9,000 as long as it is trading below the levels of 9,300. As far as the trade is concerned, Sun TV is one that had formed a bullish pattern. It is still trading above the threshold of 370, 372. So I think as long as it is trading above 370, we can expect levels of 395 coming in Sun TV. So any jump in Nifty or a mid-cap index can give a thrust, a push to Sun TV. So for me, at the timing, that would be on my radar. For fresh shorts, I think Axis was on the radar, but it's already moved weak. So I would give it some more time. But fresh shortings, I would still avoid. Let the markets trade for at least 15-20 minutes. But as far as positive is concerned, Sun TV is one that should be on the radar.
Okay. Quick opening thoughts. Chandan, if we have you, I think the link froze, but if you are there, quick opening trade.
Yeah, so like negative sentiment on the Nifty and the Bank Nifty, overall till Nifty remains below 9450, we are expecting 9,000 or even 8,800 kind of level. Similarly, the Bank Nifty till it remains below 20,000, we are expecting 18,700, 18,200. And selling idea we have given on SBI where we are expecting 5.7 cut, but buying side Bharti, we are expecting the move towards 555. So the negative on the Nifty and Bank Nifty and SBI, and positive on the Bharti Infratel could do well in such kind of market.
Yeah, man, thanks so much for joining in today and giving us your perspectives. Really appreciate your time. Ajay Srivastava with his thoughts on the market. Ajay, so good having you. Thanks so much for joining in.
Thank you. Good morning.
Ajay, pleasure having you. Just a bit of a slightly longer tail view, Ajay. I think I take on board this question on the back of the Bank of America Merrill Lynch report on banks, wherein they are saying that we might be actually looking at stress case number or stress case scenario for Indian banks closer to FY 21-22. We talk about the near term too often, Ajay. What about the medium term? What about the long term? Do you reckon that banks could come under severe pressure on earnings, NPAs, and valuations over the course of the next 1 year?
Okay, Neeraj, whatever happened in the last 72 hours gives me a great amount of strength to my conviction that we got serious problems ahead. And the reason I say 72 hours is that in the last 72 hours, instead of there being a stimulus given to the economy, all the state government and central government put together have levied a charge on the economy. So, instead of giving us 100 rupees, they're taking up 500 rupees out of the system now. When that happens, it's going to pinch everybody's pocket. The purchasing power is gone from the system, which means that the banking system, which should have got some help from the government in terms of fiscal stimulus, then people have money to look after the needs or pay the EMIs or loans, or the companies get money to pay the loans. This is going the wrong way. It's going exactly the opposite way it should have gone compared to the rest of the world. So when you want to go this path, which is reverse in the rest of the world, you are looking for a train wreck. It's not that it's going to happen. It is inevitable it's going to happen, because now you turn all policies upside down, that in the stress the system more, which means that who will take the stress? The stress will be taken by the bankers at the end of the day with NPAs or moratoriums and so on and so forth. So I quite concur the fact that the developments are very, very disturbing. And if this continues, we are looking for a much bigger train wreck. And a lot of people, I think, have talked about the bank and the so on and so forth. The problem with the banking system is that it's an industry which is leveraged 8 times or maybe even 9 times. Now, you can imagine if you borrowed 9 times of what you have, and people who deal in future market can well understand what I'm saying, how so easy it is for your margin to disappear with 10% of your loans going bad. So this is an industry which will need to look for more capital. So not only for stock market investors, there is a problem, but also I think most banks will have to raise capital in the next 12 months, with whatever that means to the share price. But it's going to be a really tough ride now.
Ajay, so my question is this then: if it is not going to be only a asset quality crisis, but a confidence crisis, and in all probability a policy-led crisis as well, what are we doing at the levels that we are doing right now?
Well, we are a very optimistic nation, which is very good. We are a very optimistic bunch of investors, which are very good. I was on another channel and I called that the great market recovery, the great India rope trick, because rest of the countries gave us stimulus, the market went up. We didn't give a stimulus and the market went up. So there is no harm in being optimistic, but there is no harm in losing money in the market also. So that's a mantra. So the point is that a lot of people at the end of the day, and there's huge amount of liquidity is sloshing in the system because nobody is putting money to business at the end of the day. So even if you're a businessman and you're getting some rental income, some income coming in, you want to push it in the market because interest rates are what they are. And you saw the fiasco of Templeton, that money came into the system. A lot of people are averaging out their holding and saying, okay, I bought at ITC at 250, let me buy at 170 and maybe it'll average out. So, market has its own way and we are built on optimism. Number 2, the SEBI's diktat on shorts. This is what will happen when you do all these artificial thing, that you put 100% margin on shorting and let the bulls run amok till the fundamental hit them. And therefore now we sit with the bulls, sit with the losses. So when you tinker with the market structure, you can inflate the index for some time, but then the reality will hit you. So what's happened in this market is over optimism. Global rally was taken to be an Indian rally, and the shorts were taken out of the system thanks to the margin. So you had a free run on going long position. Now, if you're not got out of it, it's going to hurt you. But I wish SEBI brings back order, allows bulls and bears both to work in the system, shorts and longs both to work in the system, and you will get realism coming. Okay, only one thing I must say this: in all this mayhem, I think the agriculture sector will do very well, because the harvest is bountiful. Government focuses on agriculture. Agriculture credit will not get compromised to a large extent. So I think if the procurement does well, all the industries related to agriculture would, I think, stand out in the industry compared to rest of the economy. So I think we'll have to make a distinction of agriculture-related companies and non-agriculture-related companies.
Okay, and I'll make that in a bit. But first, Ajay, before that, I want to get your thoughts on the OSs in the markets. And I'm asking you if there is a reason, and a great reason, to question these businesses and the valuations, not the business necessarily, but the valuations. Now, HUL earnings give out the fact that even if it's for a quarter, disruptions can hurt numbers. Asian Paints yesterday, in an interaction with one of the media houses, said that Q1 is a goner. We know that for paint companies, Q2 usually is not a great quarter any which ways. These stocks are trading northwards of 50-55 times in a year where earnings are probably going to be a washout or might be a degrowth, and the recovery in FY22 may not be that high. Are we right in giving them the valuations of 50-55 times because relatively they are better, or in absolute terms they too should be lower than where they are right now?
Well, Neeraj, you have to look at a little different perspective for some of these stocks like Hindustan Lever, Nestle, Asian Paint, etc. And the reason is these have got holders with very strong hands, people who don't come and trade in the market. The liquid quantity of stock, physical stock in the market is very small when it comes. Look at the trading volumes in context of the size of the companies. It is minuscule. Look at Nestle, for instance. The trading volume could be 20, 30,000 shares. And the fact is, I have a lot of investors of this kind who are holding this stock for last 10 years. Every correction they buy and they hold. They never sell these stocks. So, so yes, technically the market should respond to what the events are happening, but these are the stocks being held by very strong hands who do not sell in the market. Number two is, these are the companies where there has been no dilution of equity for last, I think, 2 decades, if I'm not wrong, maybe more than 2 decades. So no fresh stock has come into the market in terms of supply of the equity. So whoever has it, holds it. Whoever does not have it, whenever finds a way, he buys it. And that's what has happened to the stock. And number three is no fresh supply coming. Dividend yields are very strong. You don't have a governance risk. Yes, you have a price risk of 1 year and so on and so forth. But believe me, if you look at the Nestle's and Hindustan Lever shareholding pattern, you'll find a lot of them holding for 20 years, 25-year plus. So, so yes, technically the market should react, the price should react, but the holding power is so strong of these investors and the floating supply is diminishing by the day. Everybody who buys Nestle or a Lever, maybe a few people buy trade up and down, but by and large, people are holding these stocks. So you will find that dichotomy continues because supply is limited. Good hands and strong hands are holding who have no need to sell it. This will be sold if the ultimate disaster happens to Indian economy and people need money. Retirees, old people, youngsters who want to put up corpuses, people who put up trust funds for their children are all loading up on these stocks, knowing that at least it is safe enough rather than going into the rest of the economy. So you got to look at perspective is holder of stock, strength of holding power, floating stock, and then you look at a response to earning. And that is why you kind of see this dilemma that they don't respond to earnings at all, or maybe just about 5-10%.
Okay. The other question that I have, Ajay, before we get to agriculture, is what happens now to the great divestment dream? I mean, and do you think that this hike of duties and not passing them on to customers but getting the OMCs to absorb them kind of punctures that divestment hopes for a company like BPCL, or no, it's not that grave an issue?
Well, divestment is all about pricing. Now, if I'm reading the newspapers today correctly, the government wants to sell Axis Bank and ITC. Now, you did not sell Axis Bank and ITC at the peak last year when you should have sold as a true market operation. Now, with ITC at 80-70% down and Axis Bank at 1/3, you want to sell the stocks. So, if that is the mood, if the decision-making power is that we should sell Axis and ITC, etc., even today at these prices, and then it is very clear that the valuation makes no difference to anybody. I think the sale will happen. All that will happen is that valuation get compromised. But will that be so? But having said that, I think the key issue is the process of disinvestment is not moving forward. Where is the information memorandum? Where is the data room? Where are the due diligence starting? We are too far away from anything happening. So I'm not even sure in the current year you'll have any disinvestment of true kind. You can have a share sale. But to sell strategic investment will take, a BPCL will take minimum 6 to 9 months for a due diligence exercise to finish, the documentation to finish, counter guarantees, warranties, now who will warranty on behalf of Government of India, etc., etc. There are a whole host of issues. So my guess is it's not about valuation. It's all about the process itself. And in the meantime, the government needs to find the resources. So you'll find excise duty coming. I don't think people are even looking at valuation or divestment. I think it's a survival for today, money for today.
Okay. Now, Ajay, one final market question before we wrap up the conversation with the agriculture question. And that final market question is this. Let's assume that the hypothesis is that we are headed lower unless something exceptional happens. My question is this. If indeed over the course of the next 1 week, 2 weeks, 3 weeks, we do get some announcements around some measures taken by the government. I mean, it's about time that it comes out. Maybe it was about time last week. But let's assume it does come about. Maybe for MSMEs, maybe something for some other sectors, etc. Small in nature, but does come about. Does that have the potential to revive the flagging spirits? Because frankly, we are no longer at 9,800. We are at about 9,150 right now. So we're not at the peak any which ways, at the near-term peak at least.
To me, it is not going to happen. nothing going to happen because the way the schemes are being devised, if you look at the NBFC scheme, the 10% risk scheme, the new scheme of EPF, we're saying companies up to 100 and with 90% employees below 15,000, which just puts eligibility off. You saw the LTROs on the NBFC is falling up, at 8.7 lakh crore going into retro. So I think that my confidence in the schemes are dropping, that the way whoever is structuring the scheme doesn't have to understand that either they don't want to give it and they just put the optics around it, or they don't understand the mechanics of the scheme, that how it operates on the ground. So any scheme of any kind, unless it is dramatically different than what has happened in the last 6 months or last 30 days or 45 days, I don't think we'll move the needle, because by the time the money gets in, we are already too late in the game. I sit in Gurgaon and I'm going to work right now and we have one of the industry companies factory. Nothing is working at this point of time because it's impossible to start the process. So at the end of the day, I would still believe that unless there is a dramatic difference in strategizing and genuinely wanting to put the money in the hand at the lower end of the thing, nothing will happen. And it's a hypothesis, but we might even go and test the market lows again. In our view, we are bracing for that we will touch the market lows again of 7,500.
Wow. Okay. Now agriculture. Ajay, would you simplify it for us? What do you mean when you say that that is the one space that could kind of, for lack of a better word, stand out better than the rest?
I think two set of companies will do very well. Agrochemicals will do very well in this setup because you will have imports being restricted, which is going to come in from China, etc., will be restricted. So the local companies are pretty strong. So they will have a good run on the market. And given bountiful harvest and the rains, the requirement will be quite a lot in terms of demand side. So I don't think demand is a problem. If procurement is done properly and the money is with the people, they can pay for it. So it's not a credit risk. And so therefore, agrochemicals and tractors, I think, will be the two standout winners in this market if the agriculture produce is bought and money is available to the retail market. Now, that's a proviso. I think it will happen. It's a political compulsion to do it. Therefore, agrochemicals and tractors, I think, will be the standout performers for the next 12 months.
Okay. Can I squeeze in one more question, Ajay? And that is on the pocket that is looking very strong with the business momentum, at least from the management side, seemingly okay, and that is specialty chemicals. A lot of people question the rally. A lot of people are in support of the rally, believing that this is multi-year and not just a very small flash in the pan move. What is your thought?
See, okay, specialty chemical is a very difficult business, okay? And so to that extent, it's not easy for someone to come and duplicate it. And if the government move is by and large is to be protective, I think this segment will do very well. There is no problem segment, except the specialty segment, you got to distinguish between what is it for. Because if it's for industrial use, then you're linked to the economy. If it is a pharmaceutical use, agriculture use, then you're fine with it. So, just to put everybody under one bracket and say all specialty chemical will do well, no, the buckets of them will do well, and to that extent. But this is an input industry. So you will not, if you remember, this is like a HEG or a graphite kind of stuff, that you have graphite goes into steel production, etc., etc. So specialty chemical will do well, provided the companies focus on pharma and agrochemicals. If it is focused on industrial chemical, I think you'll have a serious problem. And we're already seeing it. That it's not that demand, specialty chemical companies have a great demand for industrial product. The caveat is that a very few companies, the cash flows are strong. They sell on cash. Mostly they sell on cash. To that extent, their model is pretty good. But the valuation also are now reaching 4 to 5 times book value, which is the peak at which you would like to buy at all anything called specialty chemical, preferably lower. But once it reaches price to book of 4 and 5, I think you've got to be out of this game in this specialty chemical, no matter how attractive the company is.
Okay, Ajay, fantastic to chat with you today. Thank you so much for taking the time out and wade well as we head towards the levels that you're talking about.
Thank you so much, sir.
Pleasure. Pleasure is ours. Thanks so much. Okay, viewers. So that's a big market view for the day. As we speak, the Bank Nifty is corrected about 1.5%. The Sensex is down about 0.8%. So it's looking wobbly for sure. Axis Bank is down 5.23% now. There is weakness in ITC, down about 5.78%. There is weakness in UB, down about 1.5% as well. Indigo is 930 and counting. GM breweries and the liquor names have corrected quite a bit. And I dare say, I think some of the specialty chemical companies are doing okay. Deepak Nitrite is about 4% higher, so that's a few. And the fertilizer names are doing okay, but that's few and far in between, really. Otherwise, it seems to be a bit of weaker hand yet again for our markets. ONGC is up about 1.5%, so that is probably holding fort right now, but the oil marketing companies have clearly been decimated. 7% lower for BP, 6% lower for IOC. Titan about 2.5% lower as well. We wrap it up on this leg of Indian Open. Thanks so much for watching.